Let's look at an example of what happens when we issue normal shares. In this example, we have authorized share capital of 100,000 shares, and during the year 20.2, the directors decided to issue 60,000 of those shares to the public at 15 Rand a share. In other words, we'll be receiving 15 Rand for every share that the public applies for. The public ended up applying for 65,000 shares, and the issue cost relating to the issue of shares was 3,000 Rand. So the public sent us money or applied for shares worth 65,000 multiplied by 15 Rand. So the money that we actually received from the public came to 65,000 Rand, 65,000 shares, multiplied by 15, which is going to give me 975,000 Rand. So that's the money that I actually received in my bank account, 975,000. Now, this is not yet capital because I haven't allotted it or awarded it to the shareholders. Therefore, I first have to take it to the application and allotment account. Okay, now the nature of this account, in essence, is that as of now, it is only still a liability. It is not yet capital, since we haven't given them their shares in return. So either we need to give them their money back, or we have to give them share certificates. So at this point in time, it is still only a liability, not yet capital. Okay, so we decided to only still issue the 60,000 shares that we originally decided on. So 60,000 shares multiplied by 15 Rand is going to give me 900,000. So we will only be allotting share capital of 900,000 Rand. So I remove the 900,000 because I will be allotting these, and I credit my capital because now I've given them share certificates. They are now owners of the company. However, the other 75,000 Rand, that was the money that was oversubscribed, in other words, I need to do something with that because this account needs to come to zero. So I'm not going to be giving them shares, which means I need to pay that money back. So I debit my application and allotment account because I need to pay the money back, and I credit my bank account for the flow of the money. And now this account has zeroed out. Okay, but there's one more thing that I've left to do, and that is the share costs of 3,000 Rand. Okay, now since this relates directly to the issue of shares, it is in other words not a normal expense for my business operations because it's related to the issue of shares, in other words getting capital. I'm going to be taking this straight to my capital account. So I credit bank because I'll be paying the 3,000, and I debit my capital account and write off share issue cost directly to capital.